Hello, this is our weekly market alert video for the week ended July 9, 2021. And last week was characterized by a freak out attack by the bond market, which then caused the stock market to freak out. And then it appears it all as well. So we'll explain all that to you here in just a moment. But I want to share with you that I made, I think, one of the most important decisions maybe in my life last week. And it's a decision that I'll have to live with maybe for the rest of my life. And that's why it's so important. And that's the decision as to what I'm going to be called by my grandchild. Okay, so this is a really important decision. And I'm going with Papa. Okay, the P-A-P-A, not Paw, not P-A-W, P-A-W, but Papa, P-A-P-A. This was a big decision. Lots of names are floated, and all that. My wife, she's still working on it. She's got it narrowed down to seven. So she's got it down to 7 names, and she'll massage those and figure it out. We got about a month and a half before the baby's due. So I guess, although I guess the baby won't be talking for a while, so maybe we've got another year and a half or so. But anyway, I made my decision. It's done. So let's talk about last week. One of the things that a lot of people don't know is that the bond market is significant. It dwarfs the stock market in value. And the bond market is basically loans, and the stock market is basically equities, stocks. And so when I issue a bond, that's just a nice way of saying that I borrowed money. But nobody likes to borrow money. It's not fashionable. And so we say that we issue a bond. And so if you look at the stock market is usually a love affair. People buy stocks in many cases because they're in love. I love Tesla. I love Amazon. I love Apple. I love Bitcoin. They buy things because they love them. The bond market, on the other hand, they're lending people money. So when you lend somebody money, unless you love them, which by the way, I don't recommend, don't lend people you love money. But if you are lending money, you are probably going to do your homework to be sure that you can get repaid, that they have the balance sheet and the income to pay you back. So bonds are issued in the cold light of day, and stocks are bought a lot of times out of some infatuation. So in our view, watching what the bond market has to say is a better forecaster of the stock market. Even though the stock market has predicted bear markets and recessions, but the bond market is actually uncannily accurate. In fact, over the last 50 years, the bond market has predicted every single recession. It's 100%. So what happened last week was we suddenly saw interest rates go down on the 10-year Treasury. And this was unexpected because the economy's recovering, and everybody thought, oh no, the Fed's going to raise interest rates, and oh no, it's going to be bad, and this and that. But instead what happened was interest rates went down. Well, that was concerning because usually interest rates go down when the bond market is seeing bad things coming. And the bond market is really good at predicting bad things coming, and therefore we saw a sell-off in the stock market because if those guys think things are bad that are coming, then we better get out now. Well, what does it all boil down to? Well, in our view, it boils down to the unemployment numbers, and in particular, it boils down to the labor participation rate. So the labor participation rate is the percentage of people of working age that are working. And right now it's 61.5%, which translated means that 38.5% of all the people in this country that are of working age are not working. Okay, so, and why not? Well, it appears they don't want to go back to work yet. They're taking their time. And the anticipation, the projections for most investors was that things were going to turn around quickly. All those jobs were going to be posted. It was going to, suck up all the labor supply, and we'd have mass people going back to work, and profits would soar, and the stock market would go up with it. Well, as it turns out, it's not going to be as fast, and people aren't going back to work as quickly as thought, and therefore companies will probably not make the profits that were thought to be made, because if your people aren't coming back to work, I know of many restaurants that are closed on certain days because they don't have labor. Cruise ships are canceling trips, and airplanes are canceling airplane flights because they can't get people, and that's profits lost. So as those profits are lost, stock prices, which normally are a reflection of profits, are going to go down too. So, but in the long run, we think that what happened this week was an overreaction. It was a correction. It was a recalibration, if you will, of expectations. And the data supports that it's going to take longer for this recovery than we had at first thought. But it's still going to be a pretty massive recovery. So despite everything, we think that we're still going to see some new all-time highs going into the end of this year. We've already seen several since we've been telling you that we would, and we anticipate that will continue. Now, on the horizon, perhaps in a year from now, we do feel that there could be dark clouds coming with the debt that we're incurring and inflation and those kind of things. But for right now, it's opportunity knocking. And if you're not invested, we believe you should be. But always, 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 if you're going to invest, we think you should have a sell strategy. And in our case, of course, we have our invest and protect strategy, and we'll implement that when the time comes. And I say when, and there's a threat to your finances, we will take action on your part. So all is well for now. Now I want to share something with you here for those of you who live in the Dallas-Fort Worth area. And I know this video is being watched in all of our markets that we are in, and we love all of you. And I think we're also being watched around the world. But we have upcoming on July 17th at our Plano headquarters, which is North Dallas, from 8 a.m. till noon on Saturday, July 17th, we have a very special charitable event that we're putting on. Our charity is called RPOA Cares, Retirement Planners of America Cares, and it's our first annual Share and Shred event. So all of you living in the Dallas-Fort Worth area, we invite you to come over. We're collecting food to donate to Minnie's Food Pantry, which has donated over 10 million meals to DFW residents in need. You can also bring any personal documents that you'd like to have shredded safely to protect your identity. We're going to have those big shredding trucks out in the parking lot. And we're going to have free donuts and coffee. So bring all your shredding stuff. We'll shred it all for you. We'll give you coffee and donuts. We'll all have a good time together. And it's all for a very, very good cause. So we're going to collect food. So bring some food with you as well, some cans, etc. The address is 2820 Dallas Parkway in Plano. And again, that is 8 to noon, Saturday, July 17th. Okay, so also I want to encourage you to like this video, if you will, on Facebook, and also share it with as many people as you would like. We would love for you to do that. So just to summarize what we said today, long video, I know, but we are still optimistic about the future. We still think we're going to hit our fearless forecast of Dow 35,000. But as always, it is important to make sure, in our view, that you have a protection mechanism in place when bad times come. And we have that, so we hope you have peace of mind, and we hope that you're letting us worry about all this boring financial stuff so that you don't have to. And we will talk soon.